Hey guys, what's up? Alec back with the daily stock market, and look at that. Such a green day in the markets today. Nvidia was up 5%, Google up 4%, going up and down and up and down. In our group, we were able to catch all the ups and all the downs at the perfect time. So if you need help getting in and out of stocks at the right time, message me here on Instagram because this trading group might be for you. We had amazing success in our group today, starting off the morning just right with a BP call up 125%, $400 on the day. Students making over 100%, 115% gains, 176% gains just in one day. And here you can see our Discord VIP chat room going crazy. BP puts, let's go, just sold, 133% gains, 176% gains, and the list goes on and on. You could keep reading those for yourself as well, up 120%, 160%. $1,500 big gainer from our group. Now, we don't have time to go over all the success stories, but if you want to become one of the next success stories, make sure you message me on Instagram and I'll send you an application to see if you can qualify, and that way I can help you out the best way possible. But let's jump right into this video because we have a lot to talk about. Enphase Energy just reported they're up 10% after hours, and you can see they have a strong history of consistently beating on earnings expectations. Okay, they came in at $1.51. Expected EPS was $1.24. We were talking about this one, so if you're subscribed to the YouTube channel with post notifications on, then you did catch this one on their earnings call after hours, 10% gain on Enphase Energy. Now, don't unbuckle your seatbelts just yet because we still have a wild ride ahead of us with Uber and CVS reporting tomorrow morning before the open. After the close, we have Walt Disney reporting, and if you guys remember my last video, we talked all about Disney stock and if they're going to be beating earnings, if they're going to be missing earnings. So if you missed out on that Disney update and you want a full in-depth Disney update on earnings, make sure you check out that video. We have Affirm reporting, we have Robinhood reporting, and then Thursday after the close, we have Pepsi, CGC, Canopy Growth Company. We have PayPal after the close, Lyft, Expedia, Aurora, and also Honda reporting on Friday. In this video, let's do a broad market update. Let's go over some important articles that we want to be focusing on. Google launches a ChatGPT competitor to protect its search dominance as the bot battle begins. Okay, and the AI, artificial intelligence bubble begins. Also, if you guys follow my Instagram, I called this that Google will be stomping on ChatGPT because a lot of people were afraid that ChatGPT was going to put Google out of business. Well, you know, it's going to be the other way around. Google's going to stomp on ChatGPT, if anything. Bring on the prompts. Yesterday, Google rolled out its response to the existential threat posed by OpenAI's ChatGPT, Meet Bard. Google said its ChatGPT rival has been released to the trusted testers and will be available to the public in the coming week. Bard, which is built on Google's mighty language processing model, LaMDA, pulls info from the web to craft fresh, high-quality responses. Google also announced plans for the ChatGPT-like feature. Here we see a fun article. Here's why Morgan Stanley continues to believe in Walt Disney's growth potential. Morgan Stanley analyst Benjamin reiterates an overweight rating on shares of Walt Disney with a price target of $115 per share. The analyst continues to believe Disney can deliver significant earnings growth over the next several years. The growth is expected to come through continued growth at its park and experiences businesses and a return to growth for its media and entertainment businesses in fiscal year 2024. The analyst forecasts adjusted EPS growing at a compounding annual growth rate of 20%. Wow. For years 2022 to 2025. So that's a very good long-term buy according to this analyst here. Now we'll continue to read. In this analyst's view, the recent share appreciation reflects two recent shifts in sentiment. First, a less bearish view on Disney's cyclical revenue streams. Second, strong results in share appreciation in streaming leader Netflix has reminded investors that streaming can be nicely free cash flow generative at scale. Okay, so keep in mind with Disney earnings too, Netflix, they did beat their earnings and their stock continued to rally for a long time after the earnings. So the question is, can the same thing happen to Disney? The path to $150 bull case is primarily paved by a U.S. economy and U.S. consumers that avoid a recession and a faster than expected ramp in Disney's media segment earnings. So that could be interesting to consider Disney for a long-term portfolio, long-term holding till 2025, the analyst was saying. But let's talk a little bit about Robinhood. Okay, they are reporting earnings. If we scroll down, we can see that they are available tomorrow, Wednesday, after hours, and they've been getting better and better at their earnings, and there's a good chance that they can actually report a positive EPS. Well, there's not a good chance, but there's a shot at a positive EPS. They're getting closer and closer to profitability. So I think once Robinhood does get at the profitability mark, that will be very, very important. So some questions that investors want to know on the earnings call are: what does the product's roadmap look like for 2023? When will Robinhood go global and allow to buy individual shares from all over the world listed exchanges? There's a new feature that was implemented by Twitter that directly linked users to the Robinhood app. What's the relationship between Robinhood and Twitter? Is there an official partnership upcoming? Which could be a super, super bullish thing if they answer that question and there is an official partnership between Twitter and Robinhood. What does Robinhood look like in 5 to 10 years? What happens if the SEC bans pay order flow? So on and so forth. Those are some good questions that could be answered at this upcoming earnings report. Okay, if we pull out to the last month, by the way, they are up 20% to $10.50 per share. They bottomed in December at around $7.70 per share, by the way. So here we see an article that says Robinhood expected to report record revenue despite sour markets. Robinhood is slated to deliver its fourth quarter earnings February 8th after the close. Revenue is expected to come in $396 million, its highest quarterly figure to date, up $363 million just from a year earlier. Although Robinhood's monthly active users are expected to have declined, with transaction-based revenue remaining flat overall, revenue is expected to have increased due to the significant rise in interest-based revenue that should come in at $160 million, down from $128 million the previous quarter. Most of the revenue comes from the interest that Robinhood charges its customers for securities, lending, and margin accounts. The company is expected to report a net loss of $131 million for the quarter, compared to a loss of $175 million in the previous quarter. So if they are expected to actually report a decline in monthly average users, that could be a negative thing on earnings. Okay, the lower figure is mostly anticipated because of cost-cutting measures taken by the firm, which shaved its headcount by approximately 23% over the summer and 9% in the spring, which could be a good thing because that could have pumped up the bottom line and the top line, but mainly the bottom line numbers. Okay, other products that are exciting include its retirement account, its equity and options trading platform, and its brokerage cash sweep program. So overall, there is some bullish things going on with Robinhood. All right, and I'll leave you guys with some of these numbers here on Wednesday. Here we can see some percentages next to ticker symbols. These are the implied movements after earnings. Okay, so implied movement means it could go either way. We don't know if it's going to go up or down, but there's a good chance that Uber is going to be moving 10% after the earnings. Affirm is going to be moving 22%. Robinhood is going to be moving 11%. And you can see some other ticker symbols as well. Affirm is now up 76%, and it was up as much as 130% earlier in the week, February 2nd. Okay, at $22 per share. So they're an earnings I'm definitely going to be watching. I'm going to be interested in. They're reporting tomorrow after hours, and I'm going to be posting on my close friends list some more updates about Affirm, what option trades you could possibly take out if it's bullish, bearish, and everything you need to know right there in the close friends list. So if you want to join, make sure you message me on Instagram. If you haven't joined already, you have been missing out. Click on the success number 7. Read through some of those positive testimonials this whole year so far. 2023, all of January and all of February have been absolutely bangers, bangers, bangers. Successful trade after successful trade. So now is the time to start trading and taking it seriously. 2023 is your year for stock market success and to become a success story as well. So message me here at the Daily Stock Market. I'll be more than happy to help you out. Thank you guys for all the love and support. Share this video with a friend if you think that they will find some value in it. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.